Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Abercrombie Fitch Co. annual report. Abercrombie Fitch Co. offers a wide range of products and services through its various brands and channels. The company's product assortment includes apparel for men, women, and kids, as well as personal care products and accessories. The company operates under several brands, including Abercrombie & Fitch, Abercrombie Kids, Your Personal Best, Hollister, and Gilly Hicks. These brands cater to different demographics and offer a variety of products, from casual wear to activewear and intimate apparel. In terms of sales channels, Abercrombie & Fitch Co. sells its products through various means, including physical stores, wholesale arrangements, franchise agreements, licensing deals, and e-commerce platforms. This omnichannel approach allows the company to reach a broad customer base and provide convenience to customers who prefer online shopping or in-store experiences. Overall, Abercrombie & Fitch Co.'s business model is designed to meet the diverse needs of its target market, offering a range of products and services through multiple channels. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline are multifaceted and influenced by various factors. On the growth side, net sales expansion through new store openings, digital fulfillment efforts, and strategic partnerships have contributed to revenue increases. Additionally, pricing adjustments and promotions have led to higher average unit revenues. However, several factors have driven revenue declines. The imposition of tariffs on imported goods has had a significant negative impact, resulting in a $90 million loss in operating income. Uncertainty surrounding global trade policies and tariffs has also weakened business conditions for the industry. Furthermore, inflationary pressures and supply chain disruptions due to armed conflicts and increased competition have added to the challenges faced by businesses. The net income for fiscal 2025 was $850,080,717. Unfortunately, we do not have a comparable figure for fiscal 2024 to determine if there was an increase or decrease in net income. Profit margins were negatively impacted by tariffs in fiscal 2025, resulting in a loss of $90 million or 170 basis points as a percent of net sales. Looking ahead to fiscal 2026, the company expects to incur approximately $40 million of incremental impact from tariffs, which is equivalent to about 70 basis points as a percentage of net sales. The lack of explicit information on profit margins between fiscal 2024 and fiscal 2025 makes it difficult to determine if there was an actual change in profit margins. However, the expected impact of tariffs in fiscal 2026 suggests that the company's profit margins may continue to be affected by external factors. Management is outlining a comprehensive strategy for the company's growth and success. The key objectives include achieving consistent global growth across brands through investments in owned and operated channels, expanding into new markets through partnerships, and mitigating external cost pressures through strategic evaluations and initiatives. To drive growth, management plans to enhance and modernize key systems and leverage technology to improve operational productivity and the customer experience. Financial discipline is also a priority, with a goal of maintaining double-digit operating margins and expanding net income per diluted share. However, management acknowledges that current macroeconomic conditions and tariffs will have a negative impact on operating income in fiscal 2026, estimated at approximately $40 million. Despite this challenge, the company remains committed to its growth strategy and is taking proactive steps to mitigate external pressures and drive long-term success. The company's financial strategy has been focused on share buybacks. In a significant move, the company has purchased a total of 625 shares as part of its ongoing efforts to manage its capital structure and return value to shareholders. This decision reflects the company's confidence in its future prospects and its commitment to maximizing shareholder value. Furthermore, the company has also set aside a substantial amount for potential future share purchases under existing plans or programs. With an approximate dollar value of $950 million yet to be allocated, it is clear that the company remains committed to this strategy. This move demonstrates the company's confidence in its ability to generate strong cash flows and its willingness to invest in its own shares. The company is facing concerns about inventory buildup or supply chain disruption. One of the main reasons is the impact of tariffs on goods imported into the U.S., which resulted in a $90 million negative effect on operating income in fiscal 2025. Furthermore, the company expects to incur an additional $40 million in incremental costs from tariffs in fiscal 2026. The situation is further complicated by disruptions in major maritime routes, increased transportation and logistics costs, and heightened competition for supply chain capacity due to global trade uncertainty and ongoing armed conflicts. These factors are likely to continue affecting the company's operations and profitability in the future. That concludes the financial summary for Abercrombie & Fitch Co. Feel free to comment below, and I will be happy to answer them when possible.